Well, hello again, back for another week. Well, I hope everyone's okay. It's a tough time for all and sundry, but here we are to have some respite, talking stocks, and more importantly, talking beers. Let's get it on. All the sound of COVID. Well, look, the first thing I want to say is a week might be a long time in the markets. It's also a short time. We've got takeovers, we've got dividends, we've got lithium, and of course we've got beer. The same themes, but a different beer. Let's have a taste of this one. Oh, it's going all over the place. It's quite a fizzy one. It's quite nice actually, quite strong. Oh, I have to be a supporter. It's brewed by a subscriber, Sean Simmons. Its name is Whitelakes. Whitelakes, not White Bay like last week. This week, Whitelakes. Whitelakes Brewing. Dark lager. Sean Simmons is the brewer. He's based in south of Perth in a place called Baldivis. I'm not exactly sure. We might be independent, but we're easily bought on the beer front. We're very dependent. We're beer dependent. He assures me it's under the radar. Probably means it puts you under the weather. Well, what can I say? Another day, another takeover. Like we saw, Huon made an offer by a Brazilian meat processor, one of the giants. And who stands in the way? That little Aussie battler, Twiggy Forrest. Look, I mean, we looked at Huon. The financials weren't strong. It was really not the best company in terms of the outlook. We couldn't see. We preferred Tassel. But what it does show is that any asset that somebody thinks they can get a productive return from is interesting when the alternative is next to nothing from a term deposit. Here's to low interest rates. And Whitelakes. So the other factor on which we're talking about is dividends and buybacks, or capital management as some like to call it. Well, we've been talking about that too, and guess what? CBA came to the table. A valuable cartel member came up with the goods, delivering 10 billion of cash into shareholders' pockets with an off-market buyback. I think it's retail buyback and a huge dividend. So, I mean, this is a big sign that companies are going to be delivering the goods when it comes to dividends because of the high level of uncertainty we're experiencing on the, on the Delta front, which we're, who knows really what's going to happen on the earnings front. So that's why the outlooks are going to be very interesting in the upcoming reporting season. What about lithium though? I can't keep going without talking about the battery-led lithium. These stocks are skyrocketing. I mean, we've been along for the ride, so we're very happy. But Peter Chilton's done some interesting analysis on some factors to watch out for, and that's not just exploding cars. For one thing, lithium carbonate prices are taking a breather after a big run. That's a bit, of a paradox when you see the up and upward projection of lithium stocks. So we talk about why caution is needed. I mean, for one thing, this sector's very, very early on in its life cycle, so you have to be wary. China pulled out the rug once from these stocks, can do it again, although it's less likely as time goes on. And you can't go past reporting season and the question of whether, and as I was saying, on the fundamental front. So because that's what we're here to look at, fundamentals. And in the reporting season coming up, we're paying a great deal of attention to the accounting, in particular to that big insurance I've been talking about, the balance sheet. Investors don't want to keep putting their hands in their pockets, and that's a possibility if the situation deteriorates. Just remember, companies are the economy. So it's not like they're divorced from each other. If you see really poor economic conditions. Companies, they're not they're not miracle workers. But on the other hand, let's talk stocks. First up, let's talk one I mentioned last week. The premium on Praemium is probably in the price. Basically, this stock's up 10% since we last talked about it, since I last had a beer. So, getting back to that theme that a week's a long time in the markets, PPS or Praemium's up, but to a dollar, close to $1.30, I think. A couple of months ago it was 60 cents. I mean, this is a big value appreciation in a company whose earnings conditions haven't really changed. Obviously, the market's paying up for a takeover. So if you're going to buy now, you better be, a takeover is well and truly factored into the price, because normally when someone makes a takeover offer, they want to pay 25 to 30% over the prevailing sort of share market price. Well, they'll be factoring, that's already sort of factored in. And we're hearing noises I'm hearing noises that the sale of the UK business is, a real likelihood next week. So, there's got all sorts of things going on with their result coming up. But, speaking of big developments on the market, Myer responded today to Solly lawyers' demands for a trading update. His lawyers demanded a trading update because, there were press reports of a capital raising. And then guess what they got? They got, better than expected earnings update, which meant the share price went up. So this is going to make it even harder for him to take over the company. He's been stalking this beast for 3 years. It took Kerry Stokes 12 months to get Boral. Well, Solly Lou's probably not happy. So if he does take it over, it'll probably be all script. So, that would allow him to make his takeover offer at a premium. But I mean, how questionable is that premium when the big, when the script is basically around an asset, i.e. Myer, that is weighed down by billions of dollars of leases? Well, that's questionable. I don't think we're advising anyone to buy into the Myer story. The other big retailer in our world that is Nick Scali. In our small cap world, in any case, is the furniture retailer Nick Scali. We've been taking profits on this one, having got in early. It's a great company, stretched valuation, uncertain demand. I mean, the lockdown won't be the same as last time, in part because people who are specifically desire to indulge in the lovely couch, well, they won't need to buy another one. But the other thing, I think, and that's a bigger deal for investors, overall, is on the cost front. Like the price of containers, the price of cargoes has gone up fourfold. That's a big deal. Like all these ships are moored out, so all these ships are stuck outside of LA and China. Like there's simply supply chain inefficiencies that are going to be factored into increasing costs. One of those companies that could benefit is one we've liked in the past, AVA Risk, which has a transport or a logistics business where they transport high value packages, kind of like Jason Statham running around. If you're watching, Jason, here's to you. I know you like a beer. Certainly you need them with your, sort of action hero genre. Not, The Transporter, not a bad film, but, not great either. But what have we got coming up? Well, we've got 7 new small cap mining companies Peter's run the ruler over. That's exciting in itself. Plus 4 new industrials, like education services, packaging, eco packaging or sustainable packaging. These are interesting companies, and a medical technology company. Then there's the fund managers still champing at the bit. We've got a lot to look forward to, and that's even before we get to reporting season. So we've got Blue Chip, where we're running over some big companies, 10 big companies this week. And then we've got the start of reporting season in small caps, which really does ramp up, later on in the month. So here's to you. I hope you're feeling better. Well, I hope you're feeling well. I hope you're okay, because it's been a tough time. But God knows we need our little bit of help where you can get it. Cheers.